Joining us now on the phone is RSM Chief Economist Joe Brusuelas, frequent guest on the show. Joe, it's good to talk to you. We've been talking a lot about the difficulty that people are having of getting their arms around this thing and the effect it's going to have. I imagine that is also a challenge if you're an economist and trying to figure out what the eventual effect this could be in terms of GDP. What are you looking at? What kind of data points are you looking to help you out?
Well, we're still early in the demand destruction phase that's going on, say, in oil markets or in auto markets globally. What we tend to do as economists is we look at the sort of how large the shock is and then think about the transmission channels. First one clearly is the financial channel. We're all experiencing the mind-bending volatility across asset markets that we're seeing this morning. Second, you're looking at the trade channel. Now, we're really early in the cycle here because we're just over 30 days into this. What we did was I took some anecdotal evidence that I saw. I flew into Seattle last Thursday. No activity in the port to speak of. I went and checked the big port, LA Long Beach. It matched up with what the locals in Seattle told me, that this had been going on for several weeks. And sure enough, we've got the tip of the spear forming, which is there simply aren't going to be enough containers around to ship U.S. exports around the world out of the ports on the West Coast. It's very important that we look at LA Long Beach because that handles the most of the Asian trade. And we should expect to or anticipate over the next 2 to 4 weeks, you're going to begin to see, starting Monday, in the ISM manufacturing survey in the verbatims, indications that this is going to cause a temporary disruption along with some demand destruction in oil. So that's the start. Then we'll look for everything around transportation, leisure and hospitality, tourism, and of course, high-end retail will really be one of the things we'll watch closely due to the lack of tourism into North America.
Joe, what's your base case scenario for GDP growth for 2020 in the U.S. as a result of this? And I know we have a 50 basis point hit in the U.S. because of Boeing. So what is the extra hit due to the containment of economic activity because of this?
Okay, so for the first quarter of the year, I've got 1% on the board right now. I'm assuming the 0.5% due to Boeing that you indicated, and another 0.3% due to export disruptions linked to the first stage of the coronavirus. Now, depending on the size of the eventual outbreak here in the United States, we will have a big variance on growth in the second quarter. Based on what the CDC told us, I would look to have another sub 1% or a sub 1% rate of growth in the first half. So you're going to have barely there growth in the first half. And then we'll have what I would call an evolving rebound. I'm not expecting a V-shaped global rebound in the second half of the year. I think it's going to look more like a Nike swoosh, where you'll get a big rebound out of China, but the lagged impact of bankruptcies, lagged consumption, it's just going to take a while. This is this is the outlier of all outlier risks, right? I know there's a lot of expectations around that V-shaped rebound. Let me tell you why that's not going to be the case. If I'm planning a trip to Hong Kong in March that I don't take, I'm not going to take 2 in August when the all clear sounded, right? So there's the destruction of demand by this temporary event is not going to be made up, right? So we're going to have a very unsteady year. It would look to me like if we get to 1.5% this year with the rebound in the second half, or really in the fourth quarter, we'll do very well. And hey, we're still in early stages, guys. I'm literally at a hotel looking at the White House right now. Here in Washington, people are really down about this because of the uncertainty around the outlook. And the ways in which the federal government's going to have to mobilize to address this first, just in terms of the medical side. And then if there's a real problem, we're going to be talking special lending facilities for small and medium-sized enterprises over the next couple months. But let's hope we don't get there. Let's hope that the mitigation efforts work by our medical community and we only have the temporariest of disruptions.
Yes, here's hoping. And you're in D.C. now. I believe you'll be joining us in New York a week from tomorrow. So we look forward to seeing you in person and getting your take on what is going on at that point. Joe Brusuelas, RSM Chief Economist, thank you.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.